Maybe you can start by telling me what's going through your mind. Like, why are you interested in getting a life insurance cover?
The life insurance cover is because of maybe to leave something for my family once I'm gone.
Yes. So you have children? Yes.
Yes, I have children.
Mm-hmm.
Yes.
Okay. Yeah. So that's a very good decision. So usually I start by explain. Even if somebody has an idea of how life insurance works, I like to start by explaining why we buy a life insurance cover or what it is, and then I give you an opportunity to ask me questions, and then we end by doing the math. Like I asked you how old you are, how much you can afford. You said you're a non-smoker, so we will do the math for you to be able to know, with my budget, how much money would I be able to leave my children.
Okay.
Yeah, so the main reason why we buy a whole life insurance cover, it is to protect our children from premature death. So you've seen cases where a parent passes on and then they leave their children with no school fees, with no money for toys, with no money literally for your children to continue living their lives, at least uninterrupted financially. So you buy a whole life insurance cover so that if God forbid you passed on prematurely, there is X amount of millions that your children are paid so that they can continue living their lives. So for example, you said that you can afford to pay 10,000 per month. So as an example, you can take a cover where you're paying 10,000 shillings per month for the next 15 years. And so a frequently asked question is, Agatha, what happens if I do not pass on within the 15 years? And I always tell parents, of course, I'll be happy if you do not pass on within the 15 years, because I want you to live a long life so that you can bring up your children, right? So that you can see your children throughout their childhood. So in this case, what would happen is that you buy a cover for 10,000 that you're going to be paying for the next 15 years. And then after the 15th year, you stop paying for the cover. Yes, after the 15th year, you stop paying for the cover. But even if you stop paying for the cover, you'll still be insured for life. So you stop paying for the cover on the 15th year, but you're insured for life. This means that if you passed on, whether you pass on at 90 years, at 105, at 130, it doesn't matter. That money that had been promised to your children is still 100% guaranteed. So in a nutshell, at first you are buying protection for your children, just in case you pass on prematurely. But then after 15 years, for most parents, after 15 years, your kids are either 18, 19, they're young adults. So at that time, they're not as vulnerable as they were when they were little children. So after the 15 years, now it becomes a liquid inheritance. Yeah, and leave your children. So yeah, at first it's protection, and then after 15 years it becomes a liquid inheritance. The one thing I would like you to understand, because I always repeat this statement, for a whole life insurance cover, you have to pass on in order for your children to be paid.
Right.
Yes, because there are people who think that after the 15 years you can get access to the money. No, a whole life insurance cover is a gift that you're buying to your children. It is the greatest gift that you're buying to your children. You're buying them first a gift of protection, and then later on it becomes a gift of liquid inheritance. Because I always ask people, even you, if your parent today left you 10 million in cash, because the payout of a whole life insurance is paid in cash. If your parent today left you 10 million shillings, wouldn't that change your life in a way?
It should.
Yes,
it should.
Exactly. So that is why we buy a whole life insurance cover. Yes, so that is the main reason why we buy a whole life insurance cover. On the same cover, you can decide that I would like to protect myself because I'm the person who's going to be paying these monthly premiums. I would like to protect myself. How can you do that? The first thing that you can do on the whole life insurance cover is you add something we call the critical illness cover. So you've had people being diagnosed with the likes of cancer, kidney failure, somebody's in a coma, you need an organ transplant, those critical illnesses where in our Kenyan society, instead of preparing for them, right, by buying insurance, we usually wait it out. Okay, sometimes people can't afford, but usually we wait it out. You get diagnosed with an illness and then we form WhatsApp groups and harambes. That is how we try to pay for those illnesses. So on your whole life insurance cover, I usually encourage people to add a critical illness cover so that if God forbid you ever got diagnosed with a critical illness, then you as Alvin now, you'll be paid a cash payout, and then you get to decide whether you want to seek your treatment in Kenya or abroad. That's up to you because the cash money will have been paid to your bank account. So that's the first thing that you can add to your insurance cover, a critical illness. The second thing that you can add to your cover, and I'm saying that you can add because they are optional, right? Because there are parents who come to me and tell me, I just want to buy life insurance for my children. I just want to protect them and to leave them an inheritance. I have a good medical cover. I do not need those things. So that's why I'm calling them you can, because they're optional. Now, the second thing that you can add is what we call accidental death stroke disability. So accidental disability, the way it works is, if God forbid you ever got involved in an accident, there are two bad things that are likely to happen. The first bad thing is that you end up with a disability. We've seen people getting into an accident and ending up with a disability. So the question is, if you ended up with a disability, how will you survive? You need some form of income replacement. You need some money to be able to, because that is a change in lifestyle. So again, if you got into an accident and you ended up with a disability, you'll be paid a cash amount of money to manage your situation. But if you got into an accident and died from the accident, it is your children who would be paid that accidental death money. So in the case of an accidental death, your kids get paid twice: the accidental death money and the whole life insurance money. So in a nutshell, that is why we buy a whole life insurance cover, to protect our children or leave a liquid inheritance. And then in terms of living benefits for us, we get ourselves a critical illness and accidental death stroke disability cover. Yes. So now it's a chance to ask me questions.
Must it be 15 years?
No, it doesn't have to be 15 years. You have options. So you can take 10 years, you can take 15 years, you can take 20 years. So yeah, you can take 20 years. You can take up to the age of 60, right? So up to the age of 60. So for someone who is 50 years old can decide, let me take up to the age of 60 because maybe that is why I'm going to retire. You can also take up to the age of 65, or you can decide to pay your whole life, which I do not recommend, because why would you want to pay for the cover your whole life? Like even when you're 105, somebody is asking you for premiums. Yeah, so those are the options that are available. So the good options are those: up to 60, up to 65, 10 or 15 years. Yes.
Okay. I understand now.
Yes. Any other questions?
No. Maybe as we move on.
So now that you don't have other questions, we can generate the cover, the quote for you, because now you shared how old you are. It's time to ask ourselves, how much does 10,000 get a 43-year-old? So you are currently 43 and not 42?
1982 to date.
So yeah, you are. Yeah.
Right? September 1982.
So that is, you will turn 43 in September?
Yeah.
So you are 42 at the moment.
Oh, it's 42, eh?
Yes. Okay. So we will use 42 because we usually use the current age to calculate, to do the math. So let me do that. And then after that, you get to ask questions about the cover. So you are 42, because it actually makes a difference. The older you are, the more expensive it is to insure you. So you are 42, not 43. You're a non-smoker. So someone like you at 42, I would recommend you get a 15-year cover. So you see 42 plus 15, by the time you finish paying for the cover, you'll be 57. A 57-year-old is still a productive member of society economically, right? Yes. So with 10,000 shillings. Now, before the first figure I'm going to read for you is how much money do you get for your children with 10,000 shillings without adding the critical illness and accidental death. I will add the critical illness and accidental death later. Okay?
Oh, okay.
All right. So for now, before I add the critical illness and accidental death, with 10,000 shillings for 15 years, you would be able to leave your children 12.2 million.
12.2
million, yes. What do you think of that figure?
And I wish to do it for 10 years, not 15.
Okay. Now, that's okay, by the way, that's very okay. If you do it for 10 years, the money, because you've now just slashed 5 years of making contributions, now the money reduces to 9.4 million.
Okay.
Yes, what do you think?
9.
Yes.
For 10,000.
Yes, 10,000.
For 10 years. 10,000, 10 years.
Yes, 10,000, 10 years. You get to guarantee your beneficiaries 9.4 million.
Okay. Let's move on.
Yes. So now, would you like me to add the critical illness and accidental disability additions? Okay. So if I add for you a 3 million critical illness cover and a 3 million, first of all, please note that you can decide to make it higher or lower, the critical illness and accidental disability figures. I'm just using the 10,000 to tell you the best that you can get out of your 10,000. So you can get a 3 million critical illness cover, a 3 million accidental death stroke disability cover, and then the money for your children now will be 6 million. Like there are a few thousands, but it's specifically 6,057,591. So you see now, because sorry, you have a question.
So we are already done with the life insurance. It's 10 million, right? It's for the 10,000. It's 9 million.
Okay, I want you to think of it this way, kidogo. I want you to think of it this way. We were using the 10,000 to shop for one thing, right? It's like we've gone to the market, we had 10,000 shillings, we were shopping for one thing. When we were shopping for only one thing, which is whole life insurance, that was 9.4 million for your children.
Yes.
But now, no, wait, I'm answering, yes, wait, because I don't want you to get confused. We were using, it's like you're going to the market, you have 10,000 shillings, you want to shop for three things. What we did is that we used the 10,000 shillings to shop for one thing. We only shopped for whole life insurance using your 10K. And that's why I started by telling you the figure I'm going to read for you, it is for pure whole life insurance without adding the critical illness and accidental disability.
All right.
Yes. So now, and then after that, when you said that you want the critical illness and accidental disability, I went back to the market and decided I'm now using 10,000 to shop for three things. So the money for your children had to reduce.
Okay.
Yes, and that's why I said the critical illness and accidental disability, they are optional. That's why like some people get to decide I don't want them. But because life is unpredictable, I always recommend at the very least add critical illness, or ideally both, for you to be fully insured.
Okay, I get you now.
Yes.
So the amount now is it's no longer 9, it's now 6.
Yes.
We add.
Because we have added for you more benefits: critical illness 3 million, accidental death stroke disability 3 million. Yes. Yes.
Or if you make you can work backwards and maybe the whole life insurance to cover 10 million.
Good. We can do that. We can work backwards. That's a good idea. So so you want to leave your children 10 million. Okay.
Yes.
Higher. Now, if you want to leave your children 10 million, before we add critical illness and accidental death, for you to leave exactly 10 million, you need to be paying premiums of 10,684 shillings. Okay. Now, how much critical illness and accidental disability benefits do you want? Do we retain it at 3 million or do you want more?
Retain it at 3 million and then we see how much it comes.
Okay, so 3 million. 3 million. Now, for a cover that leaves your children 10 million, a critical illness of 3 million, accidental disability of 3 million, you need to be paying premiums of 13,902 shillings per month.
So that's around 14,000.
Yes. Yes, 14,000. 14. Why do you want to make it 15? 14,000. Yeah, because it's 13,902. Yeah.
Oh, it's 13,902. So that's 14.
Yes.
14.
Yeah.
Oh, okay, for 10 years.
Yes. Yes, it's still 10 years, yes. So you finish paying when you're 53, which is good.
Yeah.
Yeah.
I think that's okay.
Also, you have the option of paying quarterly, half yearly, yearly. You don't have to pay it monthly. You have the option of paying, yes, quarterly, half yearly, yearly. And when you do, you get discounts because you're paying lump sum.
Oh, if you pay lump sum, you get discounts.
Yes.
Okay. That's fine. I think that's okay.
Okay. Something else that I would. So first, is this a cover that you would take?
Yeah, it is.
Okay. Something else that you need to be aware of is that in order for you to be insured, because your children are getting more than 8.5 million, you need to go to the hospital to take medical tests. Are you okay with that? Yes. Why are you laughing? Why every time I'm having a conversation with men about life insurance, I tell them they need to go to the hospital for medical tests when I check up. Why?
Yeah, if it's more than 8.5, I need to take medical tests.
Yes.
Okay.
Mm-hmm.
I think it's something I'm willing to do.
Yes. Yeah, it's not complicated. You just go to the hospital. When after we sign you up for the cover, you will receive a medical letter. So yeah, you receive a medical letter with the list of tests that you need to take. So you simply go to AAR or Meridian clinics, or we can send a nurse to your house and they will know which tests they need to take. It will take like 2 hours and then you'll be done.
To do a whole whatever.
Sorry, yes, it is general medical checkup because the insurer needs to know that you're of good health before they insure you.
But it's only once, when you're buying the insurance.
Yes, it's just once, yes. Okay?
Yeah.
The only other thing I would need to tell you before I ask you when we are going to sign up is that for the critical illness and accidental death stroke disability, you are covered up to the age of 65.
Up to the age of 65?
Yes. So, yes, you're covered between now and you're 42 up to your 65th birthday. So after your 65th birthday, you will no longer be covered for critical illness and accidental death. But when it comes to your 10 million for your children, it is still 100% guaranteed. It doesn't matter whether you pass on at 102, 105, live as old as Methuselah, it is 100% guaranteed, that one.
Then let's, for the critical illness and the accidental, let's put it at 1 million then.
No, why would you do that? No, I wouldn't recommend that, because imagine a situation, because life is very unpredictable. If 3 years from now, God forbid, you got diagnosed with a critical illness and then you only receive 1 million shillings, how are you going to manage? How are you going to pay your medical bills? It's good to know that you are well insured. There are so many things that can happen between now and by the time you are at the age of 65. So many things. Life is very unpredictable. 1 million ni kidogo. Higher. Good question. Good question. Even me, I have a medical insurance and I have critical illness and accidental disability with the same cover. The way medical insurance covers work is that they have limits. Right? They have what we call sub-limits in that. Like for me, my medical insurance, they will tell you that for inpatient, right? If you're admitted for inpatient coverage, it has a limit of 3 million. So the thing is, if I got unwell, if I got a critical illness, I got admitted, 3 million ishe. And you know our Kenyan hospitals, right? 3 million ishe. What that means, my medical insurance is depleted. They'll be like, leta pesa, give us cash money. So I'm not saying that because you have this life insurance, you should not have medical. You should have medical insurance. Adulting is like that, unfortunately or unfortunately.
Okay.
Yes.
Wow.
You need both, because a medical insurance has a bill. So I honestly do not recommend lowering your critical illness. In fact, if you could, you should actually make it at least 5 million for critical illness. Because think about it. When people get diagnosed with these critical illnesses, most of the time, if you've ever been added to a WhatsApp group, most people are usually fundraising at least 5 million. So in that case, then it means that you're well insured. If you would be able to have your own 5 million, it means you're more insured than the average Kenyan. Yeah.
Oh, okay.
Okay.
If it was 5 million, how much will it be?
If it was
again
5 million, though. If it was 5 million for critical illness, you want me for both or critical illness? I think critical illness is very important. Do you want for both or just critical illness?
Just critical illness.
Good. So if you have 5 million in critical illness and 3 million in accidental disability, your premiums will go up to 15,426.
Then let's retain it at that.
At
3 million. 3 million.
Perfect. You know, it's good to ask so that to have comparison figures. Higher. So something else now that is good news, right? Usifikirie ninakwambia only bad disclaimers. Good news is that this cover, to cater for inflation or the rising cost of living, this cover also accumulates 2.5% bonuses every year that you're alive. 2.5% bonus. 2.5% bonus for every year that you're alive.
For every year that I'm alive.
Yes. So 2.5% of 10 million is 250,000. Yes. So every year that you're alive, you will receive an email and text message to tell you have credited an additional 250,000 to your cover. This means that your children eventually will get more than 10 million.
Oh.
Yes, they will get more than 10 million because of every year the cover is accumulating bonuses.
Okay, and if the 10-year lapses and I will wish to continue for 15 years or 12 years or 11 years?
You can't, because you chose 10 years. You like after 10 years you have to stop paying for the cover. You can't continue.
Yeah, okay, it's okay.
Okay, all right.
10 years is okay for me.
Yes, 10 years is okay for you, it's a good cover, honestly, because eventually your kids will get more than 10 million and you have a critical illness cover and accidental disability cover. So we would consider you an insured person if you got this cover.
Okay.
Hi, so when do we sign up?